Hello and welcome to another update video about silver as we are heading into a new trading week. Not much change from the weekend or from the last update. I think I made one on Friday or so. I am waiting for further confirmation that we are indeed now in a breakout or we are setting up for the next upside breakout on the silver chart. I think it was the weekend update or like the Friday update when we talked about this descending wedge pattern. We've seen this now break, okay, and next micro resistance is at around $29.60, and we really need further upside continuation from here. From an Elliott wave point of view, I don't have any, let's say, confirmation yet that we've bottomed. I would need to see the next 5-wave move to the upside, at least on a smaller wave degree, to really get the next breakout set up. At the moment, I don't see this. This to me is unclear what this micro pattern here is. Doesn't look like a 5-wave move, at least not a clear one to me. At best, all of this might be a diagonal or something. But either way, you know, we might take the perspective that the low is in the, or you might do that. Depends on what your perspective is. I can't confirm it yet. The decline can be counted complete. So the wave count is technically or can technically be seen as complete in this correction, but we know that corrections can always extend out and, you know, extend a bit further, and that's what they love to do. And we're dealing with a so-called ABC structure here, flat correction, in which the A wave bottomed on the 23rd of May. That was around $30. The B wave looks like a running flat correction to me. And the C wave to the downside, yeah, it might be complete. It even reached the 100% extension level. We talked about that in the last video. This seems to be strong support around the $29 mark. Yeah, it's not exactly there. So here it did even drop down to $28.60, but there is a lot of fluctuation going on there. So there's a bit of support there, and we are anyway in a support area. This orange support zone is the support zone that is designed to, let's say, support the price in any or in a wave 2 correction. Yeah. So from here, as I said, a third wave rally could start, but there is not yet enough evidence for that. We've broken above the initial trend line. Yes, if there is a successful break from a wedge pattern, let's say traditional Elliott wave, and no, not Elliott wave, traditional technical analysis might tell us that the first target is typically the beginning of the wedge. Now that might be up here somewhere around $31.50. What I would really like to see now is that we are holding the Thursday low for further confirmation that we've bottomed, yeah, and that we reach the next trend line, and ideally at the same time a 5-wave pattern emerges. Again, this is too small for, let's say, reliable wave counting. This could be, you can count that in too many ways. This here, for example, was a clear 3-wave move. And this might also turn into a 3-wave move. I can tell you what the initial resistance will be, but that's really just here looking at the 30-minute chart. Mightn't be so interesting for many. But looking at the bigger picture, nothing changed anyway. So the $29.90 level will be next resistance, Fibonacci resistance, because that's the 100% extension. If this is an ABC structure to the upside, we might see some resistance there and then further continuation to the downside. Yep, the C wave could go higher, but that is the first key level. And really, we need not only 3 waves up like an ABC, we need 5. So that's what I'm watching for. Overall, quick reminder of upside targets. If the third wave starts from here, we're looking at a rally, an impulsive rally ideally, to round about $38 to $39. And then another wave 4 and another wave 5 should send us higher. I need to shift everything here to the right because this is taking time. Okay, yeah. When would I need to change my view to something more bearish? Well, that would be if there is a break below $27.32, because any wave 2 pullback shouldn't really break below that 78.6 Fib level. Silver is a bit more volatile than gold. So on the gold chart, we rarely see a pullback to the 78.6 Fib level. On the silver chart, it happens a bit more frequently. So definitely a level we shouldn't ignore. So that's my update about silver. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.